In this lesson, how to use ADX, the learning objectives are: you should know what ADX measures, and you should know different strategies to use to help you trade using the ADX indicator. ADX, which stands for the Average Directional Index, is a trading indicator that's used to measure the overall strength of trends in the market, but doesn't show the direction of the trend. ADX is one of the most versatile and useful indicators that there is. It's often used as a filter to enhance an existing trading strategy by removing a lot of unwanted and losing trades. ADX fluctuates from 0 to 100, with readings below 25 indicating a weak trend and readings above 25 signaling a strong trend. Calculating the ADX involves 3 steps. First, you calculate the plus and minus directional movement, which is plus DM and minus DM. The plus directional movement is equal to the current high minus the previous high, only if it's greater than 0 and bigger than minus DM. Otherwise, it's set to 0. The negative directional movement is equal to the current low minus the previous low, only if it's greater than 0 and bigger than the plus DM. Otherwise, it's set to 0. Step 2. Calculate the positive and negative directional indicators. This is represented by a plus DI and a minus DI. The positive directional indicator is equal to the exponential moving average of plus DM times 100, divided by the average true range for the given time period, which is usually 14. The negative directional indicator is equal to the exponential moving average of minus DM times 100, divided by the average true range for the given time period, which again is typically 14. And step 3, you calculate the actual ADX. You do this by taking the exponential moving average of the absolute difference of plus DI minus minus DI divided by plus DI plus minus DI. This is extremely complex. So as you can see, we are very lucky to have the computers do it for us. But as I always say, it's good to know how it works so you can tweak it and edit it to fit your strategy. Here is a real-world example. As I said earlier, the positive directional index, which is DI plus or plus DI, shows the strength of positive price moves. When it's sloping upwards, it's a sign that the uptrend is getting stronger. When it's sloping downwards, it's a sign that the uptrend is getting weaker. The negative directional index, which is minus DI or DI minus, shows the strength of negative price moves. When it's sloping upwards, it's a sign that the downtrend is getting stronger. When it's sloping downwards, it's a sign that the downtrend is getting weaker. The ADX reading is an average of the absolute difference between these two values, which you can see on the charts. And it only shows the strength of the trend and not its direction. That's very important. So I'll repeat it. It shows the strength of the trend and not the direction. ADX levels mean different things. So an ADX between 5 to 15 is a low ADX reading, and it indicates that the market has a lack of a real trend and it is mostly going sideways. These market conditions are not well suited for trend following, working better with mean revision, meaning support and resistance levels, etc. Between 15 to 20, the market is quite calm, but may be beginning to start trend. Between 20 to 35, the market will start trending. You'll see some real trends with a noticeable slope setting in. But between 35 to 50, there's quite a strong trend. And you'll be able to easily identify the direction of the trend. And between 50 to 100, there's a very strong trend. Here are where the extreme readings are, and they're not spotted very often. However, in volatile pairs, you'll find that high readings occur more often. In mean reversion strategies, a high ADX reading may be used to confirm oversold or overbought signals in other indicators, since it indicates that there was a strong move. Sudden and prolonged moves in one direction tend to result in a market reversal. High ADX readings are great for filtering out false signals and will have a greater chance of continuing in the current direction. A trend following strategy that I would suggest you to use will use support and resistance and breakouts to enter trades. This works when price goes above a key resistance level and ADX is above 25 to ensure that we have a strong uptrend to enter buy positions. Conversely, this also works when price goes below a key support level and ADX is above 25 to ensure that we have a strong downtrend to enter sell positions. And then to exit the trade, you may wait until the ADX level crosses back below 25, signaling the end of the trade. If the red line, which is the minus DI, is higher than the green line, that is generally an indication of a bearish trend. This would be a good opportunity to enter a sell position. Conversely, if the green line, which is on plus DI, is higher than the red line, which is minus DI, that is generally an indication that there is a bullish trend and it would be a good opportunity to enter a buy position. Continuing on from what I just said, but a riskier version would be a DMI crossover strategy. This involves waiting until ADX is showing a reading of 25 or higher, and then waiting until the DI plus DI crosses above the minus DI, indicating a bullish crossover, suggesting you should buy. And if the plus DI crosses below the minus DI, which you can see here, it would indicate a bearish DI crossover, suggesting you should sell. And then to exit the position, you should wait until there's another crossover. While ADX is a great tool that can help you tremendously, it does have some disadvantages. Like any other indicator or tool in technical analysis, ADX is a lagging indicator, which means that it reacts when a trend has already started. So it may not be an effective tool when it comes to spotting early emerging trends, and also ADX also doesn't tell you about the direction of the trend. But as we've already discussed in this lesson, those are both very easy to overcome. In conclusion, this indicator is best used for screening pairs, helping you eliminate all of the pairs that are ranging, finding only pairs that are in strong uptrends or strong downtrends. The ADX indicator does not give buy or sell signals. It does, however, give you some perspective on where the pair is in the trend. Low readings tell you that the pair is ranging or at the beginning of a trend. Extremely high readings tell you that the trend is very strong or is very likely to come to an end. It is always good to experiment with different length threshold values and strategies.